Wall Street awaiting a big earnings report tonight. NVIDIA is due out with quarterly results after the close of trading. The watch is on to see what the chip giant will say about AI demand and what's ahead for its Blackwell GPUs. Jim, we had a long discussion yesterday about whether or not that's a dynamic for this quarter or next.
Yeah, I think that this is a very difficult product to make, Blackwell, and it's very difficult to coordinate it with what Michael Dell's doing. Michael Dell's a big installer. We have this super micro problem, and obviously that's just, who knows, to be able to file maybe with BDO. And you've got HP enterprises. They all have to work together with clients. You can't just say, listen, I'd like to order some of these things off the rack. As a matter of fact, the rack has to be built. That said, all that keeps happening is that orders flow in. No one has said, like yesterday was a really positive meeting with Microsoft. Today's going to be with Rockwell Automation. No one has said, you know what, you guys haven't delivered this on time. We're switching to X. The fact is you can't switch, which is a very interesting moment for a company with a multi-billion-dollar product that you can't switch even though it's delayed. And I think that speaks to their the greatest scale I've seen of a tech company. And I'm not, if someone sells it on the idea that it's pushed back to the second quarter because the yields will be better, I think that someone doesn't understand the semiconductor business. Because it's very hard to make semis, and this is much, much harder to make semis. The only thing that I could see is if AMD, and my chairperson also owns both of these, if AMD had a competitive product, then I think that you would be very worried. But I think AMD, even by its own admission, would say we don't have a product in that league. So therefore, if you sell it, I think you're selling it, and then you're going to be faced with what happened last time, which is people sold it. They sold it all the way down to 98 because they felt that somehow Jensen Huang had been finished his mission. David, this man's got a multi-year mission, and he would tell you that we're early innings. And frankly, I usually don't like that kind of analogy, but I think they're in early innings.
You do?
Yes,
I do. You continue to believe that?
Yeah, well, I've been right. So, well, I don't mean to be braggadocio.
Listen, we're going to spend an awful lot of time, though, continuing to question the spend that will take place next year by the hyperscalers, the enormity of which is almost hard to calculate, $300 billion and counting, perhaps. Much of it ending up buying the chips that they are offering, and whether or not it will actually return, there will be a significant return on that investment. I'm sure through 25 we'll talk about it. Towards the end of it, we'll have a better sense for it. It even comes to Microsoft and Copilot, which obviously Satya Nadella was talking with John Ford about yesterday. We're talking about in their meeting yesterday as well, and where there continue to be real questions about its use case in the enterprise right now.
Absolutely, and I think that's right. I think you have to say to yourself, let's be skeptical. At the same time, when you meet with Rockwell Automation and they're getting tremendous demand for companies that want to build factories using NVIDIA. When you meet with all these different world leaders or talk to them through Jensen, they all want to have their own AI because they don't want to be captive to ours. And then when you speak to Meta, Meta wants this so badly, and Amazon wants. Andy Jassy can't get enough of these. The CEO of it, Google's very hard to discern, but I understand that they can't get enough of them. So these are top.
And XAI can't get enough of.
XAI is probably what most. Yeah, being Musk. So you have a product that's like we've never seen a product probably with this kind of demand ever.
I know that the old rule, one man's margin is another man's opportunity. That's been broken for now.
Yeah, well, John D. Rockefeller, when he had 100% of the oil market, Standard Oil, not bad.
No, good business. Well, if you haven't heard, NVIDIA is going to be reporting earnings after the bell today. Our next guest out with a new note saying the company's path to a $4 trillion market capitalization begins today with, quote, another drop-the-mic performance. He also thinks tech stock will continue to rally into year-end. If you haven't figured it out, he is Dan Ives, Wedbush Securities Global Head of Technology Research. Has a buy rating on NVIDIA. Price target's 200. Why is it going to be a drop-the-mic quarter?
I think right now, demand to supply is 15 to 1. And, they're the only game in town. And from all of our Asia trips that we talked about here on the show, it is just the beginning of this AI revolution. And I think as you start to see with Blackwell, Street's still underestimating what this is going to do as all the hyperscalers start to build out that AI CapEx at the top of that mountain. It's the godfather of AI, Jensen NVIDIA, and I think that's why tonight it's going to be a drop the mic, get the popcorn out quarter.
Is it going to be from the numbers reported, or is it going to also be from the commentary around guidance?
Well, I think especially guidance, because Blackwell, when you look, we could be looking at a trajectory 20, 25, 30 billion a year, right? And if you look at how the street sort of modeled this, I think still massively underestimated in terms of where this will go over the next year or two. Look, because my view is the big question is, like, when could this get to 200 billion of annual revenue? And I think they continue to underestimate what NVIDIA and what this AI spending, this tidal wave, is going to do, not just for big tech, but especially with NVIDIA. And that's why when Jensen speaks, everyone listens. But it just shows what's coming
How
second,
hard is it
third,
to figure this out? I mean, we know, kind of have a sense for what all the hyperscalers, the main customers, are going to spend. They've told us in terms of their own commentary. Why is this a mystery?
Because I think many continue, whether it's Blackwell delays, worries about technology, over-ordering, it's about the 2 and 2 model. 2 billion beat, 2 billion in terms of guidance raise. And I think when you trajectory this out, this eventually is a company, at first you're talking about dollar earnings, now you're like, could it be $5, $6 out year earnings? But it also just shows for broader tech. Still, 9:30, 10 p.m. in the AI party that I think goes to 4 a.m. And that's why I think big tech, we're looking at NASDAQ, not just 20,000 in the next few years, especially with Trump and what I view deregulation. This is just very bullish for the tech trade.
You're referring to the average revenue beat last few quarters is about $2 billion. Some argue that it might not be as much this time. If that happens, would the price get punished?
I mean, it could a little, but I still think 2 and 2 in terms of the model. But it's also about Blackwell, you know, in terms of what that could look like over the next few quarters. And it just goes back to 3 months ago. And the initial reaction, stocks down, bears all come out of hibernation mode in their spreadsheets. This is up 17% since the watch party. So as we continue to head in, I think, like, we talk about $4 trillion. I think over the next 12, 18 months, besides them and Apple and others, we're going to be talking eventually about $5 trillion market caps in tech as this fourth industrial revolution plays out.
You said that nobody's even close in terms of competition. Does that dynamic change in 2025?
Look, I think AMD obviously trying to sort of get around the corner. Others will start to ultimately, there's some private companies going to see a lot of funding in terms of trying to find who could ultimately be in this race. But they continue to be in the left lane, Bugatti going 90 miles an hour, everyone else in a minivan going 35 miles an hour. And that's why when I look at the stock, this is not expensive. It just continues to be my view that the street underestimates where it can go and where growth can go. And that's why tonight, I think there's just another indication where this AI spending trend is.
Well, we'll be watching. Obviously, the largest market cap company on the planet after the bell. Dan, thank you.
Yeah, thanks.
Because it is all about counting down to NVIDIA today. Shares up 14% in the last 3 months. The options market is implying an 8.5% swing in either direction post-earnings. You want to tell me what your own expectations are for this ultra-important report?
Well, I think it's critically important for the market, as you've already described it, just from the perspective of we've got this entrenched bullish momentum and the expectation that you could have an end-of-year rally. And I think if there's one variable that can defeat that premise, that could actually halt the end-of-year rally, it's NVIDIA's earnings tonight. And it's a disappointment. And it's a disappointment on the upcoming quarter that ends in January, and seeing that figure come in light of the $37 billion. I actually think they probably need to do $40 billion to get the excitement in the stock and exceed a lot of the expectations. And I also think there's a tertiary effect, Scott, on the entire semiconductor industry. Let's understand something. The SMH is down basically 14% from its July high, and that's with NVIDIA being 24% weighting of that ETF. So I think it's critically important to kind of restart the semiconductor industry momentum, which appears to be broken right now everywhere except NVIDIA itself.
Steve Weiss, Bespoke, says today, since the start of 2020, NVIDIA has reported an earnings triple play. That's an EPS beat, a rev beat. They raised guidance on 15 of their 19 reports. Dan Ives, of course, the star analyst over at Wedbush today, says expect another mic drop performance. Drop the mic performance. Is that how you see it?
Well, yes and no. I think it's important to understand what the company's stock did, what the shares did in the aftermath of those quarters. In fact, they have beat them all, but yet the stock sold off in a few of them because there's a whisper number, which Joe is sort of alluding to there. You know, from my standpoint, the way I look at it is I don't expect a big beat. I don't expect a big miss. Neither missing or beating slightly is out of the question, of course. What I'm looking for and what I'm keying on, which will last more than a day, is what demand is. They'll talk about demand, and that's going to be critical. Now, having said that, if they do miss, of course, in the whole tech complex, there's a knee-jerk reaction down. However, I think that could be a buying opportunity, depending on how far it goes down. But overall, I'm expecting demand to be ratified. We see that across the AI complex, and that the evolution, is still the biggest uptake in spending in any technology that anyone can remember, including cloud, including web, including everything. And that's going to continue. And ultimately, that's all you have to be concerned about.
I mean, the fact of the matter is, though, Weiss, this is not a demand story at this point, right? It's a supply story.
Right.
How quickly can they get these new chips to market and, serve them up to the hyperscalers who are paying for them? On that note, Ives continues today, Joe, in his look ahead to the earnings. He says, we continue to estimate for every $1 spent on an NVIDIA GPU, there's an $8 to $10 multiplier across the tech sector, which speaks to their firmly bullish view of tech stocks for 2025. In other words, it's this rising tide that will continue to lift all boats.
You know what, Scott? I have to tell you, I'm somewhat skeptical on that because I don't know that we've seen that effect. It seems as though more recently we're seeing a narrowing in terms of what the performance looks like for technology companies overall. You've got, as I said before, a lot of semiconductor names that are struggling, some software names that are struggling in this environment as well. So I think after this report and as we move into 2025, I'd like to see what Dan is talking about maybe broaden out a little bit. It's certainly, if we see a continuation of the Amazon, the Alphabet, the Microsoft continuing to spend to the degree that they have been spending, I think the opportunity is there. But I don't know. I'm somewhat skeptical of what he's suggesting.
I agree
Josh
with
Brown
that.
joins us now on the phone. Yeah, hang on, Weiss. I want to bring in Josh to look ahead as well. Obviously, he's held this stock for a very long time. Josh, it's one of your largest positions. I'm trying to figure out what the knock, if anything, would be on the story, even if it's a good one. If it's the fact that the magnitude, if you will, of the beat has been shrinking, it's hard to find any negatives in this story. How do you see it going into the print?
I'm going to tell you what the number one potential negative might be. And I don't know if it's going to come up during the prepared remarks or if one of the first analysts in the Q&A portion decide to bring it up. But it's going to come up, and the answer to this issue is going to be, I think, one of the most important aspects of what gets discussed. There were reports over the last couple of days that NVIDIA had several times had to go back to the supplier of the racks for Blackwell graphics processing units because of overheating issues when these chips were connected together for custom builds. This is really important. Custom builds are the highest margin thing that happens in AI right now. So you have this issue. You have server racks that are designed to hold up to 72 chips, and there are reports that some of these, we've had reports of overheating. Now, in the last day or so, people have come out and said, no, that's already been resolved. That was months ago. Don't worry about it. That's no longer an issue. Okay, great. But it's still in the backs of people's minds. And I think if and when that comes up, that is what investors will be hanging on. Is Blackwell's launch problematic, or is it all systems go? None of us on a show about stock trading have an edge on this. This is engineering stuff. I choose to believe that NVIDIA is good enough to have resolved that issue, but the way they answer questions about it is going to be very telling to the street.
How big does the guide have to be at this point?
Well, I think the guide has to be up. I don't know how the magnitude, but if you look, Jensen Huang said Blackwell demand, here's the word he used, not my word, although I use this word. Insane. So you have to have a guide up that matches with that kind of terminology, right? So that is a secondary risk here, is if the guide up isn't big enough. And I want people to realize, and I'm sure people do realize, this is a company that over the last 12 months, if they hit the forecast that we're expecting, we'll have seen profits of over $60 billion. Not revenue, profits. That's a 15-fold increase since January of 2023. So it's really tough to keep people as excited as they have been, and it's really tough to keep ratcheting up guidance to that extent. So I don't know if it has to be the biggest guide up they've ever done, but it probably has to match the term insane. And I agree, Scott, that's another big factor that will decide whether we get red or green after the print.
Well, you'll be with us tomorrow. I appreciate you calling in. You'll be with us tomorrow to react to whatever happens tonight, and we'll look forward to that. But I wanted to hear your perspective going in. So, Carrie, you don't own the stock, but you do own Alphabet, Amazon, Apple, Microsoft, and Meta. So this matters to the degree you think that this report tonight impacts the performance of mega caps for the remainder of the year.
Yeah, exactly. And of course, it matters because NVIDIA is now the largest capitalization company in the world, and the market is just anticipating breathlessly about this. It's interesting that Joe said 40 is the number. It feels as if every single day that number to beat for next quarter is going higher. So it's a pretty high bar. And if there are manufacturing problems and they don't hit 40, that will take the market down tomorrow or for a few days at least. And the buyers of all these chips talk about what they're doing with AI constantly. It has become the catchword, AI or catch two letters, of this year. 2024, if you look at earnings reports, it's all AI, AI, AI. And if you can't get the chips, that's a problem. And that would be very, very impactful. If you can get the chips, if no manufacturing problems, but they just take the number down somewhat. I mean, if it's not 38, 39, if it's not 40, fine. I don't think the market is going to respond horribly, but I do think the market is going to be very impacted if the number is light on guidance and if manufacturing is the problem. That would affect all of tech.
All right, NVIDIA, got to hear from you. You are a longtime holder of the stock. How are you thinking about these earnings tonight?
So the market, I'll tell you the market first. The options market is saying it's going to be up or down about 8.5%. To me, I think the print's going to be great. I wouldn't be excited about any move up or down on the print. It's going to be on the call. And I really feel it's going to be all about Blackwell, Blackwell, Blackwell. And if I listen to Vertiv's call, which I did, they are increasing their guidance on data centers. Microsoft is clearly saying demand far outstrips supply. And we want to hear that as well. And so I think that we have the potential. We're actually going into next year. You know, Blackwell actually starts to reaccelerate, I think, earnings for this. And so that's what you want to see. If we don't see that, you could see that plus 8.6%, be minus 8.6%. But definitely listen to the call in the Q&A.
I mean, we know it's a supply issue. It's not a demand issue, right? Nothing that, I mean, Jensen Huang has already called the demand for these chips insane. So we already know what the story is there. It's whether they can continue to supply these chips or, you know, whether they'll be able to supply these new chips at the pace that Wall Street needs them to, I guess is the best way to put it.
I think, you know, we'll see what the whisper numbers are on the growth or what they say. But I think that we are just still in these early days of spending. And I think it's still hard for us to collectively believe that one company is just dominating this space. And so I think everyone's saying, well, when this is going to stop? When is this going to stop? It's just like there's no data points out there that I've seen that says this is even close to even leveling off. And so I think that, you know, going into the print with NVIDIA basically at all-time highs, I think we have this opportunity to push forward that and go to new highs because I just don't see demand waning. And supply will ultimately catch up, right? So if they can't meet supply, I think that's a positive for the name.
NVIDIA shares are slightly lower ahead of their earnings after the market today, but the stock has soared 191% this year on the AI boom. My next guest is overweight and says it remains his top pick. Joining me now is CJ Muse. He's a chip analyst at Cantor Fitzgerald. This is one of, CJ, walk me through your price target movements here and so forth. I mean, you've raised it to 175 now, yes? And it is your top pick?
That is correct. You know, within semi landscape, AI is still the king, and I would expect that NVIDIA will lead that group higher. You know, tonight, you know, I think 38 billion plus in terms of the revenue guide will be good enough. And then I think we're in a period of Goldilocks where we move to CES the beginning of the year, where Jensen's going to give a keynote. They then have earnings in February, where I look for a reacceleration to their top line on a sequential basis. And then we go right into their GTC conference in March, where we're going to get the new Rubin and other product announcements. So I think for the next 4 months, NVIDIA will lead semis higher.
So tell me again, what are you looking for on the guidance number, and what are you looking for in the actual results tonight?
Sure. So from a top line perspective, 34.5 billion for October, 38 billion plus for January is where the buy side is at, and I expect they'll do that. It sounds like they were able to free up some HBM capacity for Hopper, and it also sounds like Blackwell actual shipments should be as high as 5 to 6 billion for January. So when you put it all together, we should get a solid beat and raise by about $1.5 billion for each of the quarters. And then when we actually get, you know, full results for January, you know, it wouldn't surprise me if the real number is closer to 40 to 41. So numbers are going to continue to move higher. That's where we'd be focused. The second area of focus, I would say, would be gross margins. Look for them to reiterate the low 70s. And then finally, you know, the number that we want to hear, but we probably won't get tonight, would be support for a $225 billion data center number for 2025. We're going to have to wait on that. But that's really the big number that will drive the meaningful uplift for shares throughout 2025. But a little early to get that today. I think the one thing that the CEO, Jensen, will say is that they are sold out for the next 12 months. And that Blackwell will be the best cycle ever in the history of the company. And in our view, that's good enough.
Well, yeah, I mean, it's really incredible to talk about. The issue that I and many have had has never been with the valuation. For me, it's the market cap. It's at $4.5 trillion right now. So if you talk about the company, you know, if the share price doubles without meaningful buybacks or anything like that, is it going to be? It's not going to be a $9 trillion company, is it?
Well, that's aggressive. You know, with our price target, you're talking 4 trillion plus. Could it get there? You know, I wouldn't underestimate Jensen and the gang there, but that is a big number for sure. I would say that unlike the telecom infrastructure boom to support internet, fundamentals have tracked the stock price. And so if AI becomes ubiquitous, we get to a landscape where AGI is real, then the number you threw out is not crazy. Yeah. But obviously, you know, that's looking out, you know, probably 2 to 3 years from now to underwrite that type of number.
Yeah, and I said $4.5 trillion for the market cap. It's only 3.5. So, you know, maybe a doubling is totally achievable.
All right, jumping to another of the key market stories we're following today, that would be NVIDIA. Shares trading slightly lower ahead of company's third quarter earnings report. That is expected after the bell this afternoon. Some investors eyeing the report as a potential catalyst to reaccelerate the market for the rest of the year following a fade in the big post-election rally in recent days. Our next guest has an overweight rating on NVIDIA, along with a $165 price target from $143 right now. Aaron Rakers is with Wells Fargo. He's a managing director there and a technology analyst. Aaron Rakers, not Aaron Rodgers. We welcome you. Glad to have you with us. Let's talk about NVIDIA. You've got a $165 price target, which for NVIDIA is a fairly modest move higher compared with what we've seen in the past. What are you trying to say by placing the price target at that rather more modest level compared with prior performance?
Yeah, look, we'll reevaluate that, you know, as we get out of this earnings tonight. But, you know, at the end of the day, you know, our view on NVIDIA has been unchanged. It's a platform story. They're competing at a different level in this whole AI build out. We just came out of a supercomputing and AI conference yesterday where the excitement around Blackwell continues to be very strong, talking to the system vendors such as Dell and various others. And so, our thesis continues to be, in our opinion, well intact at NVIDIA and continues to be our top pick. I would point out that, if you look at the valuation, the stock is trading at less than a 30 multiple on calendar 26 numbers. It's historically over the last 3 years traded north of 40. So we don't think we're stretched from a valuation perspective. We think it's just all about, what's the pace to a $5 plus earnings power, and we continue to see the stock working higher.
You say that the Blackwell cycle is going to be the key focus here. Are there issues with the Blackwell chip, either their ability to get it into the system fast enough? There have been some talks about overheating. Explain that to me. What's going on?
Yeah, so our opinion is that, if you went back a month or two ago, there was a lot of discussion. Even they highlighted the fact that they had to do a remask on some of the Blackwell chips. I think some of these recent issues are more related to that. So it's more or less old news. Based on our discussions at the conference that we attended yesterday, we think Blackwell's progressing well. Even NVIDIA had noted that in a special address yesterday at this conference. Talking with Dell, which also announced that they've shipped the first Blackwell NVL72 platform to a CoreWeave over the weekend. We think we're going to see strong commentary on a forward basis on the Blackwell product cycle. And really, at the end of the day, I think what investors need to see and hear is, this durability of demand. Can the data center business for NVIDIA continue to grow sequentially as we move not just into this next quarter, but into fiscal 26, or rather calendar 25 for the company?
Aaron, what are you expecting for the guide? And where do you kind of fall when it comes to the results tonight, the gross margins? I mean, what is kind of most important for you?
Yeah, I mean, first and foremost is data center. So our preview going into this print was that we thought that they can do 30 billion plus of data center revenue. So that was, at the point in time, it was about $1 billion and a half or so higher than where consensus was. I should point out that consensus estimates have continued to move higher into this print. Actually, out-year numbers have moved up about 6 or 7% since the beginning of this month. So we've definitely seen some build of expectations higher into this print. I think on the margin discussion, we think the company can sustain a 70% plus gross margin. That will be a topic of discussion, but I think the bigger driver of the story continues to be this data center business, and emphasis is on Blackwell, but it's really a platform, right? They're selling networking, they're selling GPUs, they're selling their internal interconnect called NVLink. It's a true platform story. Even software monetization, we think, is still additive to the NVIDIA story.
How deep and how wide is NVIDIA's moat, as they say? In other words, how long can it maintain this primacy in this ecosystem?
Yeah, so our opinion, and we do cover AMD, is that AMD can participate in what is a very large market. So we are constructive on AMD, but at the end of the day, we think AMD is in a market where I think they can maybe be a high single-digit market share player. So we still think that durability of this competitive positioning strong. They're executing on what is now a yearly product cycle cadence. And we think through our forecast, through calendar 26 and even into 27 and beyond, NVIDIA is in the dominant driver's position in this whole AI build out. We will continue to watch a competitive landscape, not just AMD, but also internal silicon efforts. But we still very much believe NVIDIA, again, I keep saying it, is a platform story, which is very different than the competitors that they see.
I want to come back to where we sort of began, and that was the discussion of price target. We're at 143 on the stock now. You have a price target of 165. And you said, well, we'll take a look at the end of the day here today, at based on what the numbers say and what they say, at whether we would change that. What would make you change that 165 and move it up? What would you be looking for specifically?
Yeah, I think it's a great question. So again, I think it's consistent, messaging. They're not going to guide beyond this current quarter, but, just the durability of demand on a sequential basis as we move into calendar 25. We're at the early innings, extremely early innings of this Blackwell product cycle. So that's one point. I've continued to believe that the software monetization side of this, is very supportive of what we think can be a mid 30, plus multiple on shares of NVIDIA. And then the final thing is, I think a lot of investors are trying to gauge the pace or the path to a $5 plus earnings power. So we've already penciled that out to calendar 26 to the extent that that starts to look more like a calendar 25 story. That would obviously be reflected in our updated valuation thoughts.
Jason, I'll go to you first because you're the shareholder here. What are your expectations going in? Are you concerned in any way?
No, I'm excited, Scott. I mean, one of the things that's super interesting to me, I mean, this stock has had 7 straight triple plays, beat on the top and the bottom line and raising of the guidance. You know, as Christina said, we're expecting 83% revenue growth year over year, a double on data centers, almost 100% growth year over year. So I think it is about the guide going forward. Again, the whispered number, as Christina mentioned, is $37 billion. I think they'll be above that number, which will be positive for the stock. And I think the market is really leaning into this because there has been obviously a little bit of digestion since the Trump blitz in the market. And I think going forward, this could be the next catalyst for the rest of the year. So I'm excited about the print. I think it'll be solid. And I think we'll see our 8th triple play for NVIDIA.
Yeah, let me just ask you about the whisper number, because, you know, whenever you talk about a whisper number, it means that expectations are incredibly high, right? You're not just able to reach the number set by the street. You've got to reach an even higher level, and they've been able to do that, right? As you said, the triple play, you beat on earns, you beat on revs, you beat on guide. But it shows you that the bar for this company remains especially high. Let's not forget, these stocks as a group have stopped trading like a monolith. This stock has extended itself from the others, which I would say makes the bar even higher.
100%, Scott. I mean, what's another interesting note, you know, if you remove them from the equal weight semiconductor index, you know, obviously NVIDIA is up 190+%. That index is actually down 4%. You see ASML, AMD, Lam Research, obviously down, not trading as well, clearly. So, yes, the bar is very high for this stock going forward. But, you know, when we've heard from all the hyperscalers throughout this year about the CapEx spent on AI compute, that's not slowing down. We continue to see that guide continue to raise in terms of spending, and all those beltways lead back to NVIDIA. So that's why I think this will be a strong quarter. And to Christina's point, I think the next quarter will be even stronger. So that's what we're excited about.
I mean, when you think about what NVIDIA is going to mean, you know, what are your thoughts on that?
I mean, mechanically, the market is implying an 8 percentage point move in reaction to the numbers. That's what the options market says right now. It's 7% of the S&P. Mathematically, the 8% move is material to the overall index. And I do think it is also about, you know, confirming of timelines of rollouts of next generation. All that stuff is going to get penciled into the 2025 outlooks, which we've already done to some degree, of the spenders, of the investors, the CapEx sources on all this stuff. So it matters a lot in the short term, I think more tactically in the longer term. Meanwhile, outside of NVIDIA, semis have had a rough patch. So you just sort of wonder if there's going to be any coattails at all on what it might have to say.
No, that's a good point you make. Come back to you in a minute. Let's bring in Stacey Rasgon now, a star analyst from Bernstein. It's good to have you with us on this important day. Most important thing going in is what?
Look, everybody's going to be looking at the data center number, both in the quarter and more importantly, I think, in the guide. That's all that's mattered for NVIDIA. I mean, for quite a while. Like that's what matters. To build to that number, I mean, I think you alluded to it. It's the ramp of Blackwell that's supposed to start in Q4. People are going to want to see where that is, and importantly, like where that can go into the beginning of next year and beyond, especially as the crossover happens from Hopper to Blackwell. I think the other thing that people will be watching is gross margins. That was the issue that kind of hit the stock last earnings, and they sort of suggested gross margins were ticking down a bit into the back half just because of some of these new platforms are launching. They're very complicated. They've got more high bandwidth memory. They haven't optimized cost yet. And so people want to get some comfort that the gross margins are not going down too much, and that importantly, as you go into next year, more of those platforms ramp, that they aren't going down even further. But in general, I mean, what's going to drive everything is just what is that data center? Where do they pin the data center number into the end of the year? And that will sort of drive the exit rate when people start to shape their calendar 2025 estimates.
Yeah, I mean, the estimates, I don't know, the whisper number $38.5 billion maybe. But how significant are you thinking about this overheating story and how meaningful, if at all, it might be, the work you've done on it yourself? What can you share with us?
It does not look like it was meaningful at all. And look, so that article came out, suggested that there were some overheating issues at the rack level that may potentially cause, delays down the line. Not long after it came out, like Dell and some others actually put out their own announcements that there was shipping. And then there was some news reports yesterday that suggested that issue, when it occurred, was several quarters ago, so it was old news anyways. You have to remember, as you're ramping these new platforms, and again, they're very complex, things like this are always happening. So the big question was it something, out of the ordinary, or was something more normal? It does seem like it was more normal, and again, it seems like it was an issue that was sort of long settled anyway, so it doesn't seem like it was a problem. So I'm not too worried about that.
In NVIDIA results, how cross we're going through them. Initial move is down about 4%. Paul, we heard earlier, maybe it was from you, that there would need to be a $2 billion revenue beat in order for this thing to move higher. How much, though, is it important to get the full context of these numbers, especially because there are all these concerns about incoming quarters? How big is the pipeline? If they say some positive things about that could have an impact on the continuing reaction.
Yeah, and you're exactly right. When I was talking about the guide, I was more of a short term, like in the next couple of days. But later on in the call, they usually guide for a quarter ahead.
We got the details ready. Got to stop you there, Paul. Yep. Christina Partsinevelos has the numbers. Christina.
Yeah, we're just getting the top and bottom lines right now. Numbers. We are getting EPS of 81 cents per share. That is higher than the 75 cents estimates on revenues of 35.08 or $35.1 billion, which is also higher. And I'm going to come back with more of the data center numbers and guidance in just a moment.
All right.
Back over to you guys.
Yeah, thank you, Christina. Paul, I'll let you finish.
Yeah, so I think, in the call, hopefully there'll be more clarity on looking ahead to next year. What's the Blackwell production going to be? We know demand is there. Whatever they can make, they'll will be bought. But it's a matter of production and how much they can get out the door. So that's a more of a longer term. But for the short term, it's the revenues, and I think it was just slight of a $2 billion beat. So that that's. For what the stock has reported relative to expectations, that's not really that impressive compared to what they've done.
Yeah, and I know you said you were looking for a beat on the guide as well, and we're going to get that info from Christina Partsinevelos hopefully momentarily, but I got a sense from looking at it that this guide on the revenue side, on the top line, might not be quite as strong as some were hoping for. Patrick Moorhead filling in here. The data center revenue came in pretty darn strong here. Data center revenue, $30.8 billion. You mentioned that's really most of what you're concerned about here, right?
It is. It's the number that matters for investors, and it's where their stratosphere of growth is coming from. And like I said, they came in and they beat, but narrower than they typically did. And now everything rides on this guide. And if there's any challenges with the guide, then there needs to be some explanation on the H series to the Blackwell series, and the market will react. I agree completely with the speakers talking about if they didn't beat by a mile, then the stock's going to go down, right? And that we saw very similar characteristics. There was a little bit of spooking on the Blackwell silicon issue, but once the market chewed through that and got through the call, everything went up and to the right.
Patrick, we've got more metrics to bring our viewers. Christina, what do you have for us in this report from NVIDIA?
Let's start with the guidance, because that's what everybody was looking for. Q4 revenue, $37.5 billion, higher than what the street was anticipating, but still lower than the whisper numbers that I was seeing, anywhere between $38.5 to $39 billion. The CFO also saying demand for the Hopper architecture is strong. Our H200 offering grew significantly in the quarter. Blackwell production shipments are scheduled, again, to begin in the fourth quarter of fiscal 2025 and will continue to ramp in fiscal 2026. So again, that was a lot a lot of this was riding on the Blackwell shipments. A lot of people were the street was anticipating shipments to really ramp up in the end of next year, their fiscal year. So that's exactly what she's reiterating. Again, Blackwell production shipments are scheduled to begin in the fourth quarter of fiscal 2025 and will continue to ramp in 2026. So you can see stock did drop initially, but still, almost 1% lower at the moment, slightly below the whisper number, but the guidance was a beat for NVIDIA in the January quarter.
Christina, thank you. Patrick, I know I just interrupted you. I'm going to go back to you to finish your thought and also react to some of the guidance numbers we got. We also got Q4 non-GAAP gross margin. It looks like 73.5%, which is basically in line, slightly better than street expectations as well. But the Blackwell shipment guidance, what do you make of that?
I mean, it's positive, but I also want to reinforce that it's small. The clear majority of what the company is shipping now and in the next quarter is Hopper. And you're going to see a gradual ramp from Hopper to Blackwell. And, the company had a couple things it needed to show. It needed to show the gross margins weren't impacted. Essentially, you have a different architecture that could have weighed on that. But then again, it could have been made up by market expansion, the entry into networking. What I'm seeing from my industry analyst perspective is all positive, all expected. Every hyperscaler that I talk to cannot get enough of these chips quickly enough. TSMC is sold out for the next year and a half. That gives pricing pressure. Sorry, that gives pricing power to NVIDIA. I just don't see how they lose.
Mike Santoli, want to get you back in here. The gross margin guide for the fiscal fourth quarter from NVIDIA, 73.25 plus or minus 50 basis points. And sure, the top line guide is a modest beat, kind of in line, but I can't help but couple that with this snowflake report and the ambition behind it, right? Because all of that data flowing into the transformed data center is part of what ends up feeding AI. So that, in a way, is positive pipeline indication, demand indication for the likes of NVIDIA, no?
I mean, obviously, directionally it is. I think it's kind of remarkable that we're slicing it so thin in terms of, what's been guided in a quarter that's, already a few weeks old, and just shows you again how the tight tolerances of how this stock has come into this number. I do find it interesting. Pretty minimal movements. The winners initially on the reflex are the sellers of all those juiced options that were implying an 8% move. That could change. No doubt on the call, there's going to be a lot of big picture bullishness. The mission is not yet complete. We're going up and away. But I do find it interesting that initial little sell-off attempt was bought. So a lot of jockeying and a lot of people really, it's the machines fighting each other over small increments of near-term guidance. I'm interested to see if you get it fleshed out in terms of, through next year and what they're seeing so that somebody can make a more coherent fundamental case.
Okay, I want to get back to Christina Parts-Neveles for more from this report.
Yeah, the CFO commentary is on the website right now, and there's a line that really stood out. Both Hopper and Blackwell systems, those are their two iterations of the GPUs, have certain supply constraints, and the demand for Blackwell, that's the latest iteration, is expected to exceed supply for several quarters in fiscal 2026. So that's a warning right there that supply is still going to be constrained for several quarters. We still don't know if that's going to mean a push out or any delays, but to me that sounds like a warning, possibly too why you're seeing this movement downwards for the stock. Guys?
All right. Christina, thank you. And shares are down about 3% right now, but bouncing around, as you can see right there on your screen. Paul, I want to get your reaction to everything we've just heard in this report, including the fact that demand is outpacing supply. We knew that was a dynamic, and it sounds like it continues.
Yeah, I mean, it's pretty incredible that the company is raised guidance by, $500 million, and that's disappointing. But it just goes to show you how strong this stock has been. I mean, they've routinely raised guidance by closer to $2 billion or $1 billion or more. So this it's short. And I think to what Mike was saying earlier, maybe the reason the stock isn't down more on that marginal, revenue guide higher is the fact that it hasn't done anything in 5 months. It's basically right where it was 5 months ago. So it has had some time to, rest, so to speak, and, let the market catch up with it.
Shares of NVIDIA lower by about 3% ahead of the earnings call, but off the worst levels of overtime. And joining us now on set to break down the results, D.A. Davidson Managing Director Gil Loria. Got a hold rating on NVIDIA. That's special. Gil, welcome. So it looks like, to me, NVIDIA could be getting gradually less expensive here, given that the stock hasn't gone up, but they did, even though maybe slightly, outperform on some key metrics. Hyperscalers are continuing to buy these chips, and then Snowflake plus Anthropic and Snowflake's strength here in its results, doesn't that present a demand creation moment for NVIDIA?
Absolutely it does. I mean, these are remarkable results, as they have been reporting for the last 6 or 7 quarters. I think the reaction in the aftermarket is, hey, they need to do this at least 5 or 6 more times to justify the current valuation. If you think about the bull case here, and you've heard that many times today, it's that they can do $5 of earnings 2026 and trade at 35 times that. That's $175. That's the bull case. If they miss on any of those massive hurdle raises that they have for the next 5 or 6 quarters, the stock could be half of that. That's the challenge investors have to balance, is that there's a lot of things that can go wrong. Right now, though, the demand is fantastic.
Let me play Jensen's advocate here. The likelihood of them missing seems pretty low when you look at what looks like stability of hyperscaler demand, and the overall software demand pouring in. Microsoft at Ignite is just making the argument that people do want its AI offerings. They're continuing to spend on this stuff. So 5 or 6 quarters from now, it might be too late to get up off a hold rating. When do you do it?
Well, so consensus estimates are that NVIDIA is going to grow 50% next year. That means all those hyperscalers need to increase their already very high levels of CapEx by 50% or more. And they've been talking about, Sundar Pichai talked about overinvestment. Satya Nadella, to you yesterday, talked about catching up on investment. Those are not terms you use when you intend to continue to invest like that forever. Those are terms you use when there's a point where you're going to push the brakes. And if that happens next year, and NVIDIA has to guide to down results at any point next year, that's something investors need to be aware of.
But Gil, we're looking at data center revenue that's up 112% year on year this quarter. It's another record. And right there in the release, you have Jensen Huang talking about, basically the stack, about what this is going to mean for compute. We know inferencing is a big part of the story here. Software, partnerships. It's more than just the picks and shovels themselves in terms of the long-term trajectory for NVIDIA. So how much does that need to factor in?
Well, so I'm glad you brought up the picks and shovels analogy, because NVIDIA is selling picks and shovels. Microsoft, Amazon, Google are renting them out. But people actually need to find gold. They are not finding nearly enough gold to justify the levels of investment the hyperscalers are currently making. By our calculation, by the end of this year, Microsoft will have invested $80 billion in AI. Now, they'll have a $10 billion AI business from that, but it's still probably a money-losing business. And if Microsoft continues to increase spend, especially if it increases spend by another 50% next year, it's going to be that much harder to get a return on investment unless their customers start finding a whole lot more gold.
So if you have a hold on NVIDIA, and who's finding gold is sort of up for grabs right now, where do you invest? Especially when we talk about all of this spending that's happening from the hyperscalers and others, and then the halo effect of NVIDIA through that process when you think about supply chain and this demand versus supply picture.
Well, there is some gold being found. I don't want to say there isn't any. And again, you mentioned Snowflake earlier. They're finding some gold. That's encouraging. We want to see more of that. But the company that's really finding the most gold is Meta. Meta is buying these massive data centers with NVIDIA GPUs, and they're turning it into a way to sell more ads, to sell ads for more money, and they're growing their core business faster based on this. They're the ones that are finding gold, and that makes them the best investment of the mega caps in the growth of AI.
Wild card here, another OpenAI moment. right? Either from OpenAI or somebody else that juices investors' ideas about what valuation should be.
That's exactly right. If OpenAI comes in the next few months with a model that's exponentially better than the last model and shows that compute is still scaling, that these models are still scaling with compute, that's a game changer. It'll be a game changer for everybody, and we hope that happens. If it doesn't, and there's some signs that you've been talking about that it might not, there's going to be a letdown. And all that capacity that Sam Altman is asking for from Microsoft and others, they may not give it to him, because if he doesn't show results towards superintelligence, towards AGI, towards this omnipotent tool, he may not get more capacity. That's when you may see some hyperscalers putting the brakes on.
Shares of NVIDIA are trading lower after reporting a beat for the third quarter. But joining us now is Aswath Damodaran. He is a professor of finance, and he's known as the Dean of Valuation at the NYU Stern School of Business. He is also an NVIDIA shareholder. Professor, it's great to have you on. Do you want to get your initial reaction to these results and what it means for the valuation of NVIDIA, even as revenue has almost doubled since a year ago?
That's a scary thought, right? I mean, you deliver a 94% growth in revenue, 75% gross margins, 62% operating margin. That's an amazing company. And you lose 4% of your market value. It tells you how much the expectations game on NVIDIA has been ramped up. They don't just have to beat analyst estimates. They got to beat them by 10%. And I think investors are also increasingly focused on the guidance that NVIDIA is offering. And the negative reaction, I think, is coming from the sobering of that guidance, which is, I think NVIDIA is trying to bring investors down for a soft landing, bringing expectations down. But it's going to be painful. Every earnings report, you're going to see more of this phenomenon play out, of them beating the numbers, but still seeing the stock price go down.
How much of this phenomenon around NVIDIA stock is company-specific with investors versus a reflection of more risk-on appetite in the market, more liquidity coming into the market, and investors just being more excited about big growth stories in general?
It's not an or, it's both. The fact that investors are feeling good about stocks, that equity risk premiums are down, that they feel that they can buy stocks at a higher price is helping. But I think a great deal of this is company specific. I mean, you had $2.2 trillion in market cap over the course of a year. I mean, that's mind-blowing in terms of the additional market cap created. I do think, though, that there's a disconnect emerging here between what companies are spending on the architecture of AI, and I think your previous guest mentioned it, and the revenues you're actually generating from AI products and services. And that's going to increasingly come into focus in future quarters.
Aswath, here's my pushback on this, because, you know, it's my job. Somebody's got to. This reminds me, in a way, of the argument against buying Apple in 2018. Oh, well, there's Samsung out there. Well, how many more people can you sell a phone this expensive? Margins have to eventually come down. But it's up something like 4x, above the high levels of that year. At what point can you, and I mean you specifically, buy a stock like NVIDIA after it's been on the run that it's been on, under the idea that it's just so unique it can go much higher still?
No, I think that it is unique. It is in a market where it controls the market. The problem is the market itself might be hitting a stress point, because if you don't get ultimately, NVIDIA's revenues are cost to some other company. So those costs have to be covered with products and services that those companies sell. And right now, at least from what I'm hearing from those companies, delivering on AI products and services is turning out to be more difficult than they thought. And that's going to eventually have to show up in them buying fewer chips.
So my question, though, is what would it take? What kinds of evidence in the market would it take for you to believe, despite all of that and the idea that there are cheaper AI plays out there, this one is so special, even though it looks expensive based on what's expected in the next couple quarters, that it's still worth buying, even though you bought so much of it when it was a lot cheaper?
I think at this price, if you're buying, you're expecting the AI chip product and service market to be much bigger than people are anticipating it to be. And you got to be clear that that's what you're buying based on. I mean, even if you give NVIDIA dominance of the AI chip market, which I think they have right now, and maintaining these sky-high margins, You can't get to 144 without something additional happening. So it's almost like you're buying into another market out there that NVIDIA can find and dominate. And that's a tough call.
Do you think this speaks to the conversation we're having right now, all the hype we've seen going into AI? Is this helping to propel this broader rotation that we're seeing into other parts of the market, like cyclicals, like small caps? Keep talking about it as a Trump trade, but is it also just the fact that the AI trade needs to take a breather?
No, I think it does have to take a pause, because I think we've overreached on the AI trade. Because I think we still need to see whether it can be monetized. I see AI on almost everything I buy now. I'm not paying for any of the stuff that I'm getting as free AI. The test will be when, my email starts charging me $3 extra per month to use an AI feature. Am I willing to pay those extra $3? That's going to be the test for the AI product and service market, is whether people are willing to pay. And for that to happen, AI's got to do something you can't do right now that is unique and special.
As well,
and I think that's what we're struggling with.
What about Microsoft charging $30 extra for 365 with AI built in, and arguing this week that people are re-upping and buying more?
That would be the first test. I think Microsoft is the company among the big tech that's closest to monetizing AI. And I think it'll be interesting to see how much money they make from that subscription model. I'll be interested to see what percentage. I have Office 365. I have no desire to pay an extra $30 for AI, but I'm sure there'll be other people who will.
We start off with NVIDIA's big Q3 earnings report. The AI darling's latest quarter crushing Wall Street estimates, revenue nearly doubling from a year ago as its AI chip business accelerates. Shares, which had tripled this year heading into the report, well off their after-hours lows. CNBC's Christina Partsinevelos is back here with us on set, and it's got the numbers. Christina.
You just talked about it. 94% increase in revenues, 112% increase in data centers just year over year. Gross margin, 75%. They beat across all fronts, including their categories from gaming. I mentioned data centers, and yet the stock initially fell 2%, then down 1%. The problem is there's been so much of an emphasis on guidance. The guidance came in at $37.5 billion, slightly higher than what the consensus was, but lower than the whisper number, the number that's provided to clients. And that was the same thing that happened last quarter. We saw the stock sell off 6% the day after. The focus, though, is really on Blackwell shipments. That's the latest iteration of the GPU. And the CFO, Colette Krass, she had some comments on the website, and she said, quote, both Hopper and Blackwell systems have certain supply constraints, and the demand for Blackwell is expected to exceed supply for several quarters in fiscal 2026. So what is that doing? That is letting us know that maybe supply is going to be an issue for several quarters. We were expecting the ramp to happen in this upcoming April quarter, and maybe it's going to be pushed out even farther. So that's part of the reason why you saw more of the stock drop. Really, that's going to be the focus on the call is Blackwell chips, the latest iteration. Are there going to be delays? Overheating, which a lot of people have already debunked at this point. But is that going to be what's going to hamper the company going forward?
The constraints on Hopper, was that expected? Because there was some thought in the analyst community that if Blackwell was constrained, that Hopper would be able to sort of pick up that demand and sort of offset that negative revenue push.
Yeah, so that's a very good point. The fact that she's adding Hopper into that sentence, saying Hopper and Blackwell have supply constraints, where previously on last earnings call, they said that there were no issues. So perhaps that's a good sign that the demand has shifted straight to Hopper right now, but so much so that they're unable to keep up with it. So excellent point that they put that in the same sentence.
So do we know supply constraints are due to the supply not being there or the demand overwhelming the supply?
So that excellent point, because we know in the last quarter in the summer, it was, they had to revamp the production and change the yields at TSMC. And so that created a little bit of a delay. But according to the company, when I, caught up with them and chatted, it's not a delay. It's just normal process because the latest chip is so complex that you have to change things around and the yield is not going to be the same right away. We don't know yet now this time around this quarter if that's the same case, if it's actually issues at TSMC. I'm sure they're going to address it. I'm sure they're going to say, no, that's not the case, because they're quick to react to those reports.
First of all, it's great to have Christina back.
Of course, yes.
She's been back for the first time back
here
with us.
Yes.
Number one. Number two, so the magnitude, this is what I look at. The magnitudes of the beats are getting, listen, the numbers are huge, but in terms of percentage, smaller and smaller. And this was a $50 stock this time last year. I mean, revenues and EPS growth 80% year over year, but the stock has tripled. So any thoughts on that?
Excellent. Well, that just means everybody's getting a lot smarter, right? And realizing a year ago, I think it was a 20% magnitude difference, and now it's 5 or 6%. And hats off again, I said this earlier, to retail traders, because 48% of the daily flow is retail traders for the last 5 years, which means that they understand the fundamentals of this company and they have stuck with it. I think we need to eventually come down. You can't keep climbing at that same magnitude, which is what we're getting with Colette with these comments, right? She's letting us know, setting the tone that, we can't keep going at that magnitude. We're doing well. Demand is insane, as Jensen Huang has said. In this report, too, he said the age of AI is full steam. So there's all these wonderful, flowery words to describe demand for these chips. But I think at one point, there's not necessarily going to be a plateau, but we can't keep going at that increment, to your point.
At the same time, though, Dan, if I told you what the quarter was going to be and what the guidance would be, and I said, guess what the stock reaction would be, would you guess down 0.5%?
I would have thought down 5% or so.
Right,
I mean,
exactly.
I think to Christine's, her point is that, estimates or expectations were high, that that whisper number, that is among the buy side, right? So they put it out there, they get a sense for what consensus is, and they think this is the number that they have to kind of get above. Again, it just shows you that investors want to be exposed here. There's very few ways in which to do that. We'll talk a little bit about their major customers in a second, but do you take anything away? You just said that demand obviously is there. They keep talking about capacity constraint, but at some point, isn't there going to be a quarter where their biggest customers actually guide CapEx down a little bit? And that's that would be my fear if I'm long the stock.
Yeah, but then that's I guess, a year and a half or more out, given what we saw from all of the hyperscalers right now and the massive increases in all their spending. That spending is going to be reflected for several quarters for NVIDIA, positive. But no doubt, this can't keep continuing. And then you can argue, look at AWS creating their own chips. They're going to, compete with them directly. And that's going to be an issue with NVIDIA. But then NVIDIA will say, well, we have CUDA, we have software, we have networking, right? Networking is a big portion. Gaming is 10% of revenues. So it's not only just about these particular GPUs, which go into racks. So it's a lot more complicated. They're providing the whole, kit and caboodle, as opposed to just
end-to-end.
Yeah. There's
Christina, good to see you. Welcome back.
I appreciate that.
On the conference call.
Yeah.
Christina Partsinevelos. We were talking in the green room before the show about how important this one stock is to a constellation of trades that make the stock market go higher or lower.
It's hard to think back over literally centuries and find a single company that had so much sway over the global economy or the global financial markets. I don't think there is one that hasn't had any backing per se from a government, even British East Indies
in 1990.
Not as big as this, relatively speaking. So it is incredibly important, not just for the people trading the tick by tick right after the earnings and the call, but also when you take back a step and think about the macro picture. And honestly, this is the heart of U.S. exceptionalism. When we talk about why the U.S. outperforms for decades or more, this is it. It's tech dominance. It's the weight of tech in our equity market. It's the fact that we have companies, the Mag 7 over the next 12 months will invest $500 billion in CapEx and R&D.
Wow.
So put that in context, CHIPS and Science Act was $52 billion. So this is many multiples of that. So it's just the scale of our dominance, and NVIDIA is the cornerstone of it. So whether they disappointed or not, to me, it's the fact that you have this structural advantage.
Right.
Let me make one point about that. And I think that's really interesting. That's the estimate for $500 billion in CapEx and R&D over the next, what did you say?
Next year.
Okay. So if it comes in at 450, or just think about that. What happens to these stocks? They're going to go down a lot. And you know what I mean? It wouldn't incrementally take, because estimates are going up. And the one thing I'll just say, if you go back to Microsoft, they're 19% customer of NVIDIA, right? And we talk about CapEx, how much it went up. It didn't go up that much, right, after they reported. And so we're not seeing the sort of step functions that we saw, let's say, 3 quarters ago and that sort of thing. They also talked about being capacity constrained, one of the reasons why they didn't have higher revenues. Now, their cloud business is growing 31%, year over year, which is fantastic. They're taking market share from AWS. I just kind of feel like we're going to go from capacity constrained to capacity over, built, that sort of thing, in the not so distant future. And so when you're coming in and you're beating these numbers just by a hair, and the stocks are still sticking around, it shows you that investors still want the exposure, but sooner or later, I think it's going to be like one of those things where you're going to start seeing a couple quarters of declines by not just the picks and shovels, but also the hyperscalers.
I think that's a ways off, though, and I think that the hard part of owning NVIDIA is if everybody knows, all right, 6 quarters from now, they're going to have slower growth. When do you exit?
Yeah.
But you want to exit before all the other people decide to exit. So I don't know. There's the rub.
All right. For more on NVIDIA's report, let's bring in Susquehanna's Chris Rowland. Chris, great to see you.
Hi,
what do you make of the comments about being supply constrained, not just in Blackwell, but also in Hopper?
Yeah. I think that the Vegas line here was probably 38, 39. They missed slightly, but that supply constraint comment, that probably means they probably could have done 40 or maybe even more. We don't know what the supply constraint is of late, whether it's memory or still CoWoS. My guess is memory as they move from H100 to H200. But I think clearly NVIDIA could have shipped more here had they had all the components.
In terms of how we're supposed to dissect that supply constrained comment, part of it is understanding what was going on with Blackwell and whether or not there was a shift to Hopper in the light of a supply constraint, situation for the Blackwell chip. Have we gotten any commentary about the overheating issue? Is that part of it?
I don't think that that's part of it at this point. They talked about a successful new mask set helping yields for that product. So I'm not sure it's that chip. I think it could be an additional component like memory. It also could be these racks that are incredibly complex. We don't know about transceiver availability. We don't know about all the other thousands of components that are going into these racks. If any one is constrained, it could constrain shipments overall.
Chris, I'm going to tweak a little math here just to make it easy. So they're going to do about $190 billion of revenue next year. That's sitting on top of a company that's basically trading, $3.6 trillion market cap. Their earnings are great, but they're out earning their revenue. My point is, when does that catch up? Because either they're going to grow into that price to sales, which I'm hard pressed to believe they can, or something's got to give probably on the margin front or the earnings front. Thoughts on that?
Yeah, I think first of all we'll shake out north of 200 for next year. Secondly, you have to look at gross margin for this company in the mid 70s. It's truly incredible. When you look at, let's say, EV to rev, it really doesn't get more profitable than NVIDIA.
Taking a look at some of the line item beats, obviously all eyes was on data center, Chris, but automotive was one of the biggest beats. And I'm wondering, just in terms of, trying to extrapolate that trade, was that Tesla, basically?
That was definite. Well, I think auto is really more about the vehicle itself as opposed to in Tesla's data center. And Tesla does their own AI. I think this is somebody else. Maybe it's an early ramp with Mercedes, for example. But Colette did talk about self-driving as the huge motivator there, as opposed to infotainment or consoles. So they are moving to the AI portion of their auto story.
Chris, thanks for being on. Another question about sorry, I just lost my train of thought for a second. The competition, who do you think how far actually in front do you think, or away are we from real competition? How long are you going to have this market to themselves?
Well, Amazon sounds like they're ramping supply. AMD had a hot start. They're still going to have growth year over year, but that seems to, at least that really high-end 12 billion kind of number for next year seems to have faded. So it's a mixed picture out there. I would say that this pie is growing very quickly for all, and that I think NVIDIA can still grow even with guys like Amazon, guys like Microsoft doing more themselves. They can still grow meaningfully even into this diversification.
Chris, great to get your take on the quarter. Appreciate your time.
Thanks, guys.
Chris Rowland, and NVIDIA shares now down about 0.8%. Not too bad of a reaction considering the ramp going into the quarter. As Dan had said, you would have expected down, I don't know, a few percentage at least.
Well, I think Dan can speak to this, but I think the market vis-a-vis the expected move was expecting a $300 billion move one way or another. Now, obviously that's not taking place now. But just for some perspective, I think there are only 35 companies in the world that are that big in the first place. Bank of America, for example, is like a $310 billion company. So the fact that the market was expecting a move of that magnitude and not getting it, a lot of people are sucking wind on some options. So we'll see how that plays out as well.
Yeah. What do you think?
I got to wait for the call. I feel like there's so much nuance there that we will start to get that I would doubt we end up here flat-ish at the end of the call.
Mel, your question about Tesla is a really interesting one. Do you guys remember like 2 or 3 quarters ago, Tesla diverted, let's say, $500 million worth of NVIDIA GPUs over to XAI, which kind of makes a lot of sense if you think about what they've been building. You saw XAI was just valued at $50 billion. I think that's today. But think about now why Tesla has rallied so much over the last couple of weeks or so. It is for the idea that you're going to have regulation pulled back for full self-driving and then autonomy. They're going to rely dramatically on building out data centers, to train those cars. So that's probably something that could definitely be a bit of a tailwind for NVIDIA, especially as you see maybe some of these hyperscalers, I think, pull back as we get into next year.
All right, I hope you're all doing great today. I'm going to keep the commentary short on this video and cut straight to the point. NVIDIA beat consensus estimates on revenue and EPS with $35.1 billion in revenue and earnings per share of 81 cents. NVIDIA also raised next quarter revenue guidance to $37.5 billion. These are fantastic numbers. As I've said many times over the past week or so, as long as NVIDIA posts great numbers, raises guidance, and the overall thesis behind the build-out of AI infrastructure remains intact, then I am bullish on NVIDIA for at least the next 1 to 2 years, and I don't really care how market participants react in the short term. That being said, I am positively surprised by how the stock has reacted so far in after hours. At the time I'm making this video, NVIDIA is only down about 1.5% in after hours, which is not much compared to what happened following NVIDIA's last earnings report. I'm not worried about what happens to the share price in the short term, and I'm looking forward to the days ahead. The overall thesis remains intact, and I'm honestly very pleased with these numbers. I'm not concerned about what the stock does in the short term. Demand for NVIDIA's products is still insane as demand for both Hopper and Blackwell outstrip supply. The hyperscalers have yet to show any signs of reducing their CapEx spending on AI, and we have a clear product roadmap from NVIDIA for the next 2 years. As long as everything remains peaceful in the Pacific, and as long as none of the hyperscalers significantly reduce their CapEx, then I think NVIDIA should be just fine for at least the next 1 to 2 years. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.